You can't run this type of technology on the public internet, though. Multicast just does not support it. And so it does require the Solana network and any other network sort of saying, hey, look, we want to exceed what's possible on the public internet, and we'll still use the public internet for failover and for fallback. And, maybe the network goes from 1 million transactions per second to 10,000 transactions per second and fees spike. But you know what? The network keeps going and market makers are still able to get transactions in, and all this other good stuff can still occur.
This episode is brought to you by Sablier, the leading on-chain solution for token distribution. You'll hear more about them later on in today's episode. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed. Today I am joined by Austin Federa, co-founder of DoubleZero. It's been, I think, probably a while since, I'm sure you've been on Lightspeed in the past. Definitely since I've become the new host. I haven't had you on since then, though. We have had you on over at Xerox Research back when DoubleZero mainnet went live. So great to catch up here today and kind of get the latest from you and chat all things about the network and maybe Solana at large at the end. So how are you doing today, Austin? Glad to have you on.
Doing good. Holiday break was nice. It's honestly less of a work break and more of just like a meeting break. Get a lot of good thinking done over the holidays. So overall good. I was sick for a little while, but other than that, things are going well. How about you?
Yeah, fair. I think over here we had some sickness in the family as well. Not myself. I was safe, but girlfriend and other family members were not so safe. So definitely been hearing, it's typical, right? Weather gets cold and the illness comes. So
it's true.
Hopefully stronger for it. Let's dive into today, though. I think what I want to get from you maybe is a quick refresher, maybe on yourself a little bit, and then DoubleZero, of course. I guess if you can talk us through, some of the major highlights maybe for 2025, and sort of where you and DoubleZero have come along the way since then.
Yeah, certainly. So I'm one of the 3 co-founders of DoubleZero. We have Mateo Ward and Andrew McConnell as my other 2 co-founders. And we sort of started building the project, I would say, in mid 2024, but the idea for it came much, much earlier. And it actually came from the previous work I was doing at the Solana Foundation and Solana Labs before that. And one of the big questions we kind of kept talking about was like, how do we get a network like Solana, which is quite fast and quite performant, and there's a lot of software innovation done to make it even faster, but other blockchains run into the same type of problem as well. How do we allow it to go faster than the public internet lets it go? And that's may seem like a strange question if you're like coming from the normal world of software and the normal world of the public internet. But the thing to remember is when you talk about professional systems, almost nothing runs over the public internet nowadays. That's definitely not, that's absolutely true in financial technology companies. It's true in even like your boring old normal software company, like Google, Amazon, Microsoft, Apple, then the more exciting ones like OpenAI, they all run massive private fiber networks. Even eBay runs a private fiber network, right? The most boring of Web 1.0 companies that's still around. None of them run on the public internet for core infrastructure. All of blockchain today runs on the public internet. Well, all except the 40% of Solana that runs on DoubleZero. But it all runs across the public internet. And so we sort of got to this point where we were like, if we actually want to compete with traditional finance, and if we want to compete with traditional technology companies as well, the public internet will rapidly become a bottleneck holding us back. And this was back in 2022. I was having these conversations with Toli and some other folks. But at the time, the idea that you could build a large, effectively deep-in project that would have multiple independent contributors and verifiability and all of these things, and basically create a parallel internet, that idea was not formed yet. Some of the initial ideas were like, well, what if we could get like a consortium of different blockchain foundations together to fund like a private fiber net? A bunch of ideas that sort of seemed very like 80s in their ideas, right? And not in a bad way, right? Visa came out of like an incredible nonprofit cooperative structure back in the 70s and 80s as well. But at the end of the day, it was like, okay, we're not here. We don't have this problem quite yet. Fast forward to 2024, and like the problem's here. They were demoing Agave and FireDancer doing 1 million transactions per second on a testnet cluster that was running on a private fiber network. And you couldn't get anywhere near those numbers across the public internet. And so, the origin story for DoubleZero, it's a story of need. It is really the fact that like blockchains are going to need this, or if blockchains don't need this, we've done something very wrong in the industry because it means we're not actually competitive with traditional finance on an execution layer, just a settlement layer. And so some of our big, work in 2025 was getting the network launched, right? October 2nd, the network actually went live and turned on. People started paying fees to use the network. We've got about 40% of Solana running on it at the moment. By, that 40% by stake weight, about 50% by validator count. We're onboarding RPCs as well. And today we have, over 14 independent contributors and operators running on the network. And what I mean by that is these are entities that are contributing fiber capacity to the network and helping build this parallel high performance internet. So that was more than I thought we would have at the end of 2025. So very excited to have that. I thought we'd have more like 7. Instead, we've got about twice that.
Awesome. That's great to hear. Yeah, I definitely think there's been a fast ramp, early ramp, I think, in terms of onboarding of stake, onboarding of validators to DoubleZero. That's been very interesting to see. I think the point you make about, traditional or, existing financial systems, living largely on private networks. Definitely a great point. There's plenty of, interesting stories and books out there to read, actually, if you're uninformed. Amazon was trying to advertise to me recently around, some of the guys who had the initial idea of running cables between some of these major players to eke out, gains in the markets. So of course, there's a ton of history there, and we would expect to see that play out for blockchains as well. Of course, you may not have to go and dig the cables yourself. That's good upside for you. A lot of it's already there. I guess, maybe let's just jump into the performance. I think this is something that would be good to get an update on as a start, is kind of pre and post, DoubleZero validator performance, i.e. like not being onboarded versus being onboarded, and what that means for latency and performance.
Yeah, definitely. So if you go to doublezero.xyz/dashboard, you can see everything we're about to talk about live. All of the metrics are sourced from on-chain, all the telemetry data. So we're kind of at a place right now where Solana has not optimized. No blockchain is optimized for private networks yet. So all the timing, all of the sort of lax latency and all those sorts of things, they're all targeted at public internet reachability. So 400 milliseconds, for example, is you can't run a validator anywhere in the world with 400 millisecond block times, but you can run it in a lot of places. Now on DoubleZero, you could probably go to 200 millisecond block time, 200, well, not 200, 250 millisecond block times, and be able to sort of keep up just fine. So today, what we see is on our fastest routes, we are beating the internet by substantial amounts. And so if you look at sort of the telemetry metrics on the website, you'll see times where we're beating the internet by 50% or more. There's times we're beating it by 80% over the public internet. Most of our links sort of are in that sort of 20 to 40% improvement over the public internet perspective. But that just sort of tells one story here. This is, if you look at sort of the P99 button up there, this is sort of what matters most from a trading and operating perspective. And so when you have massive market movements or massive big market events, it's not the average that matters. It's the variance that really matters. And so this is where you run into something called jitter. And jitter is a measurement of how much your latency changes from one measurement sample to another. And so one of the main advantages of any private network, including DoubleZero, compared to the public internet, is that the latency is fixed. It does not change from moment to moment. Now, you get a very different experience if, let's say, I'm in New York right now. If I'm talking to a server in Tokyo, I may see swings of up to 40%, 50% in that latency band. So it might take 350 milliseconds one time, 230 another time, 600 another time. And that's just because you have congestion. It is the same story about why sometimes taking, going to JFK is 45 minutes, sometimes it's 2 hours and 45 minutes. It just depends on what's happening in the rest of the road system, or in this case, the rest of the internet. And so that's kind of one of the main advantages of DoubleZero is its consistent performance above the public internet, not just moment by moment performance above the public internet. So what this means for validators today is, as we've started onboarding RPCs, there's like additional percentages of profit that they are making today. Now that will increase over time as Solana starts to tighten up its timings, make the network faster, and expand the amount of transactions per second you can bring into it. This will apply to also all other blockchains too. So the place DoubleZero is most needed are in areas where you have to exceed the speed that the public internet can offer. And that can be from a trading perspective, right? I mean, you see people paying huge tips to Jito to get to the front of a block to get their transaction processed because there's a lot of economic opportunity there. We'll see the same thing on DoubleZero when we start shipping priority fees later this year as well. But a major component of this too is just block capacity. So being able to handle, blocks that are 4, 6, 10 times larger than they are today, that is a data propagation problem, which people don't really think about that much. Is like the act of building a block is actually comparatively the easy part. Building a block is just an activity that happens in one server somewhere in the world. Distributing that all those shreds and all that block data out to all the other 1,000 validators in the world and receiving votes back from them, and actually the process of consensus is the hard part. Building the block's the easy part. And that's really where DoubleZero can be a huge advantage to networks.
Yeah, the easy part, but we're certainly seeing a lot of competition lately over
Yes.
block building. So an interesting caveat
Easy
there.
to do well, very hard to do perfectly.
Fair point.
Yeah.
Maybe to the point about propagation and maybe data, or just this amount of data that the network handles. I saw as well that DoubleZero increased bandwidth by 3.4 terabits per second this year. I guess, can you right size that number for me? For example, like if the goal would be to onboard the entirety of the network, what kind of amount of bandwidth is required? And if, for example, Solana scaling targets in mind, like where are we headed?
Yeah, so there's two components that go into this. Today, the 3.4 terabits per second we have is enough to run several Solanas at today's current usage of Solana. But as we make blocks bigger, blocks get larger, which means more data moves around. One of the things to remember today is everything is running on something called unicast. And unicast is like a one-to-one packet delivery system. So if I've just built a block, I have to send you a copy of the data and everyone else who wants to listen to that data a copy of it. This is how everything works on the public internet. And this is why it took us 15 years to figure out how to stream the Super Bowl, because there's so many people that want that data at exactly the same moment that each additional subscriber is a tax on the system. More bandwidth is required to talk to them. Now, that's not the case in FM radio or satellite television. You can have 1 million people listening to the same FM radio broadcast or one person listening to it, and the tower is still doing just as much work generating radio waves as it was before. This is not the way the internet works. However, private networks can work this way. So there's this technology called multicast, which is like a industry standard technology that's existed for, it's been standard in high frequency trading and exchanges for 10 years at least, more like 15 years. And what this technology does is it allows you to send a packet once, and then the network automatically replicates that data and gets it to all the places it needs to go. So this is really, really useful on a network that's producing a lot of data, because it means two things. One, the validator itself only has to send out 2 copies of the data, an A feed and a B feed. So you have a backup feed for it. But they only send out 2 copies of the data. You don't actually send out, the 1,000 you have to send out now. The other advantage of this is it's very bandwidth efficient. So let's just take a theoretical model where you had 900 validators in London and 1 in New York. In a unicast system, that one validator in New York would be sending 900 copies of the data across the Atlantic Ocean. In a multicast system, it only sends 2 copies because the data is replicated as close to the recipient as possible by the network switches at the end. which is a really efficient way. And because there's always less bandwidth when you're crossing oceans or mountains or countries than when you're inside a data center. There's effectively unlimited bandwidth at the edge, and there's very limited bandwidth across the long haul routes. And so using that type of technology, we may actually see that, Solana might be running 1 million transactions per second using DoubleZero, and it's only using, 10 or 20 gigabits per second. It's actually using much less data than it is today because we've been able to adopt these bandwidth saving technologies. We worked with Jito on multicast for their ShredStream product, which is very similar to how Turbine works on Solana, but instead of being stake weighted, it's weighted according to however Jito weights it. We reduced their bandwidth usage by 99.96%. And it's great to save money on bandwidth, but really what that means is you now have a lot more headroom to do more things with that bandwidth, whether it's much bigger blocks or sending other types of data along as well. And so it's, these types of gains of a 99.96% reduction in bandwidth are definitely possible.
Gotcha. So, in an ideal world, I guess with optimal utilization of kind of that technology, you would say we're not really limited from a bandwidth perspective at this point when it comes to, let's scale the blocks up, let's do a ton more transactions, let's really move the needle on the network size.
You can't run this type of technology on the public internet, though. Multicast just is not supported. And so it does require the Solana network and any other network sort of saying, hey, look, we want to exceed what's possible on the public internet, and we'll still use the public internet for failover and for fallback. And, maybe the network goes from 1 million transactions per second to 10,000 transactions per second and fees spike. But you know what? The network keeps going and market makers are still able to get transactions in, and all this other good stuff can still occur. So I think, as we look forward through this is the same transition that, the Web 1 and Web 2 technology space went through as well, from being just software companies. Like we forget Facebook used to just be a software company that made one website. Today, they built their own servers, they built their own data centers, and now they're building their own subsea fiber cables. And this is just a journey that every successful company is on. You get good enough at making airplanes, and eventually you own an aluminum factory. That's just, this is vertical integration at its best. And so what crypto does is it splits the vertical integration thesis and says you don't have to vertically integrate. Solana doesn't have to build its own network layer. Sui doesn't have to build its own network layer. Mana doesn't have to build its own network layer. You can have a neutral player like DoubleZero come in and provide that faster connectivity that can be used by everyone.
Yeah, that makes a lot of sense. And I think, the point you're making here is very maybe opposite to what has been the historical ethos within crypto, is that, like, if you look to the Ethereum side of things, for the longest time, it was let's cater to the smallest common denominator. Let's get the Raspberry Pis in Africa, make sure that they can contribute as validators. And this would be a very, to say, hey, if you can't meet 150 millisecond latency or something along those lines, or if you're on the public internet, like you can't validate, essentially, just due to maybe requirements necessitated by the network. Very different approach, I guess, is really what I want to point out.
Well, one thing we have to be careful about is we're not conflating the ability to validate something with the ability to block produce. Those are two different things. And so when you're talking about validation, validating requires significantly less bandwidth than being a block builder. And so you can still validate the entire Solana ledger or the Sui ledger or the Aptos ledger or the Monad ledger on a normal computer, just at your house. You don't need a ton of bandwidth for it. What you need is to stay up at the tip of the chain and validate in real time. Yes, you do need more powerful hardware and more intense bandwidth availability. But that is an important part, and a part Ethereum has historically put a high premium on. But they are two different things. To say that you cannot validate the ledger at home is something you hear sometimes from folks as a talking point. It's not actually correct. You can validate the ledger. You just aren't necessarily being a block builder on it.
Great point. Great distinction to make. I do think typically in those conversations, you see those things get mixed up and used as a point of attack or a point of approach in the conversation.
Like if you run one Ethereum validator today, which is not a 32 bundle of ETH, that's not actually what a validator is, right? A validator is actually a server somewhere, and you can't actually it's not really viable to validate all the L2s and track all the state transitions across all the L2s on a Raspberry Pi. There's a reason those sequencers are pretty big and beefy. But setting that piece aside for a second, if you have one Ethereum validator with 32 ETH, you're producing a block, I believe, once every 10 days. And you don't actually control what goes into that block with PBS nowadays either. And so the concept of like at-home validation and the ability to always get a transaction in and a bunch of these sorts of things, they're a little less like technically true than they are sort of philosophically true, because you don't have control over what goes into your block on Ethereum nowadays. So it's a complicated system, I will say, and there it's always important. You know, one of the things like we just try and do is like cut through a lot of like the armchair philosophy that goes on in crypto and just be like, okay, this is actually how private networks work. We're not saying you have to adopt this by any means. We're saying here's a new toolkit that you've never understood or approached or thought about before. How do you want to use it, right? And that's kind of the thing we saw with Solana is like a lot of the folks at Anza and the folks at Firedancer, they don't have this kind of deep networking experience in private networks. But if you show them the tools, they say, oh, actually, like here's an area where we could use this to solve a really big problem. And it's not an all or nothing type solution. And that's what's actually really, really cool about this is it feels very unaligned to be building DoubleZero in like a very good way, right? We are not in the Ethereum community. We're not in the Solana community. I mean, we're obviously in both of them, but you know, there's no sort of like, I want Solana to win, and that means that all these L2s have to fail. It's that like we want to bring solutions to market that allow new ideas and new products and services to get built on blockchain, and just see what people build, and the best ideas will win out.
Yeah, I think that's maybe a great kind of grounding point there is that while maybe today Solana is probably the most in need of a solution like this, or at least, you know, going forward based on scaling goals, it's not that other chains wouldn't necessarily make the same kind of push towards improved latency, maybe moving to private connections.
And we've already seen a lot of interest from a lot of L2s in adopting and using DoubleZero specifically because of this. I also think a world where Solana is the only chain that is fast enough to need DoubleZero is like a pretty bearish world for blockchain. What we've seen historically are the problems that Solana faces. Others start to face about 2 years later. Whether that was, you know, congestion from huge amounts of demand because the networks can actually do really high numbers of transactions, like that is a success story that a bunch of other networks are going through now. And so I have no doubt that other networks are going to get fast enough, and some already are fast enough to need the DoubleZero network, or at least something like it.
Yeah, I think that's definitely true, and I think you know, Monad and a bunch of these L2s as well, I think are probably great examples of they're
Yeah.
pushing the performance envelope as well. So it's certainly not isolated to Solana. So great point there. Maybe we can jump to maybe goals for the network itself. I guess I want to talk through, you know, mainnet stake for DoubleZero is currently in the ballpark of 40%, I want to say. Can you
Yeah.
talk me through like the key milestones there? I know they're sort of anchored to, there's like some goals there, and they're sort of anchored to maybe like economic kind of milestones for the protocol.
Yeah, I mean, our goal when you look at Solana or any network like that is to get basically 100% of the validators running on it as quickly as possible. And, you know, there's a mix of reasons why we're not at 100% now. Some of it is inertia. That DoubleZero today, you're talking about, you know, 2 to 3 to 4% increase in profitability. We're not talking about massive numbers here for validators. So there's a little bit of inertia on some folks. Some folks are sort of rightfully just waiting for the thing to bake. I mean, we've been live since October 2nd on mainnet. That's not that long also. And so the knowledge of networking is pretty low in the crypto community in general, which is surprising. But, you know, showing people that like if DoubleZero goes down, your validator seamlessly switches back over to using the public internet, you know, those sorts of things just take time. And then one of the other components as we sort of like go through this process too, is there's a lot of entrenched interests in crypto that don't actually have stake themselves, but they act sometimes as gatekeepers to their customers. And we are We are an organization that doesn't believe that the right way to grow is through large amounts of grants and payouts to entrenched actors that are in positions of power that they haven't necessarily earned to be in. And so there's some of that too of like, if you're an exchange and you run you have a bunch of customer stake on it, we're not going to give you a grant to move your customer stake over to DoubleZero. We don't think that's what win-win incentives are all about.
Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I think that makes sense. I was going to ask as well about, you guys do have a stake matching or sort of a stake incentivization program. So to that point, maybe Binance does not meet, is not going to be a part of that. But maybe there's sort of a natural curve here, I guess I would expect, in that you're saying right now, maybe folks are only missing out on a few percent in terms of the gains that they might get from operating via DoubleZero. But if there's some financial sort of fee that they have to pay to kind of join the network, maybe the trade-off there versus the stake that they receive, like there's sort of an economic kind of curve that plays out.
Totally. And this is where, we have a stake pool, which is the DoubleZero delegation program. That is basically a pool of stake provided by, investors and other supporters of the network to help exactly with this thing. So DoubleZero does charge fees, and the stake delegation more than makes up for the fees at this point in the network. But again, there are some exchanges and other folks like that are looking. They believe themselves to be more special than everyone else, and so they're looking for something above and beyond the normal program. Which again, like I think one of the powers of crypto is incentive alignment, and most players in this industry understand that. Exchanges have historically operated outside of the normal social contracts that exist within crypto. But I think that's also starting to change. And so we've seen, some really good response from some exchanges that are already bringing folks online. I think the real leader here are the DATs, which have gone a little bit out of favor. But the live die of a DAT is, can you acquire your native digital asset at a lower marginal cost than all of your competitors? And if the answer is even 10 basis points of yes, you're gonna do that thing, unquestionably, because that's the only way your DAT exceeds the 4 other DATs you're competing against. And so, we've seen the DATs adopt DoubleZero. We've seen Galaxy adopt DoubleZero. Forward's running on it. DFDV is running on it. A bunch of these different DATs are running on it. And so we think that's like a really good, initial point, that the exchanges are also self-interested actors, and eventually their staking teams will just be like, hey, look, we should be doing this for a whole bunch of reasons. But the ultimate force here is just consumer sentiment. So if you're a staker and you want your validator operating on DoubleZero and they're not, go talk to them. Tell them you're going to go somewhere else if you're not on it.
Great point. I think maybe just to pick at the stake incentivization program, like how do you see the protocol like longer term growing into sustainable monetization? You mentioned that the stake kind of currently outweighs the cost of joining. So at some point, you can't do that forever. And of course, we've seen, Solana has had its programs in the past as well.
Yeah, I mean, so I push back on a little of like, we can't do it forever. It's definitely true that we can't do it forever, but places like the Solana Foundation have large amounts of stake. The Near Foundation has a percentage of inflation that actually gets diverted to the foundation directly. The Polygon Foundation had something similar where they increased their holdings as 10% of supply as part of the Polygon 2.0 transition. There's a lot. Hyperliquid is like a very profitable organization. There's actually a lot of different ways that these folks can pay for something like DoubleZero without actually hoisting that fee onto validators, for example. There's lots of different models out there. Now, one of the main models out there is we just need to do a better job making everything way more profitable. And that requires making these networks go faster, increasing block size. Because if you think about it, if we can say, look, you get 60 million CUs if you're on the public internet, on DoubleZero, we can support 600 million CUs. That's not going to make blocks 10 times more profitable, but it's going to make them more profitable, right? And the CU to fee ratio does not scale infinitely. Most of the fee payers are in a small number of transactions, so that piece is not going to change. But base fees add up very quickly. And so as long as we can show to validators, like, you are making objectively more money here, no one's going to complain paying a 5% fee if they're making, 30% more profit because of that. If I can tell you I could double your salary, but you're going to have to give me 5% of your salary, you'd be like, yeah, no problem. Here we go. Let's do it.
Yeah, I think that makes sense. And maybe another way, a different way of framing the question I'd want to ask is there, you know, does this result at just simply out of necessity, like, blockchains grow and then therefore it just makes sense to do so because you need the enhanced latency, or can additional services be layered on top of what DoubleZero provides that then make that value proposition even more compelling?
Oh, certainly. Yeah. For example, like multicast coming online, in January of this year, that's going to be a really big one. Validator. I mean, some of the stuff we showed at Breakpoint was that we were delivering all block data, even within Europe, going from London to Frankfurt, 100 milliseconds faster than Turbine was. Now, 100 milliseconds is 25% of a Solana block. It's a bunch of shreds. If you're a trader, getting that data that early really, really matters. And so, there's a whole bunch of this stuff where speed is going to be a major component of why folks adopt DoubleZero. And then at that point, if your validator is not receiving shreds off DoubleZero, I mean, we did this test in a validator running in, where was it? It was in Brazil. And that validator was receiving its full set of shreds, an entire block data, 25 milliseconds before it got its first bit of data from Turbine. So, if you are running a validator on the fringes of what's possible from a stake distribution perspective, you're missing some of your leader slots because you simply don't have the data necessary to build a block. In that model now on DoubleZero, the skip rate for those validators at the edge is going to drop dramatically, already has. And so when we look at that sort of thing, we there's a whole bunch of advantages as to why a validator is going to want to run on DoubleZero. Now, if everyone's running in Frankfurt and everyone's running in the European corridor, there's less of an advantage. But even during the 1010 flash crash, the public internet in Europe was impacted. Like, people don't realize this, but like, the internet is run so close to capacity. Most lines are run at 90 to 95% capacity that any little bit of unexpected traffic, the internet is just dropping packets left and right. DoubleZero performed 60 times better than the public internet in Europe during the 1010 flash crash. And that really mattered. Like, if you are a trader, seeing your jitter go to 60 milliseconds on the public internet, which is more than the entire latency to get data through Europe normally is, that's like a meaningful moment where that could have lost you huge amounts of money, or at least prevented you from making huge amounts of money. And so what we see is, like, there's a reason that literally every other part of the traditional financial economy runs on dedicated networks. These things are expensive. They're not running on them for fun. It's not just because they're afraid of the public internet. It's that, in trading, you make most of your money a few days a year in extreme events. And so if you are not set up properly to capture opportunity at those extreme moments, that's kind of the problem you're looking at against. The flip side is also true in that if you are Solana, or any fast blockchain, and there's an insane demand, you're only at risk of going offline a few moments a year at most. But if you do during those moments, it's really bad, right? It's sort of, the joke is like, exchanges never go down except when you actually really need to sell or really need to buy. And then it's like, oh man, the centralized exchanges, they're all crashed at the moment, because load capacity planning is very difficult and very expensive. And it happens on the network layer just as much as it happens on the compute layer.
Yeah, great point. Or exchanges never fail except when you're going to withdraw your
Sure.
capital.
Right.
It's
Exactly.
similar sort of death knell
Yep.
for the business. Maybe jumping into, I want to talk a little bit more into the economics of it. I guess DoubleZero, the self-titled mechanism is proof of utility for consensus, but it looks fairly similar, at least kind of from kind of the casual eye of a typical deep in kind of consensus mechanism, in that you're sort of, offering this service, in this case, the fiber bandwidth connection and then, there's a network token that is sort of paid as a reward. Are there any key differences that I guess you want to highlight in terms of how the mechanism works here?
Yeah, so we have a pretty different mechanism than everything except the proof of work protocols. We actually modeled proof of utility on what would sort of a modern proof of work protocol look like that doesn't require permanent security, just requires momentary security. And what I mean by that is like, if you can crack the Bitcoin ledger, like a lot of things are in trouble going back to 2008. Um, DoubleZero is a stateless network effectively. There's no state. We're only securing data while it's in flight. But the beautiful thing about Bitcoin is it's your rewards are directly proportional to your contribution. And that's not true about any proof of stake protocol. So on Bitcoin, if I show up with 10% of the hash power, I will get 10% of the rewards. Doesn't matter if I'm Michael Saylor or if I've never mined Bitcoin before in my life. It is a moment by moment reward based contribution. That is not the case for something like a proof of stake protocol. The Galaxy validator earns a lot more stake than a bunch of other a bunch more rewards than a bunch of other validators. It's not doing 4,000 times as much work. It just has 4,000 times as much stake. And so proof of stake networks massively overpay for economic security, which is in itself a meme, in high inflation and issuance and even low inflation. Like Ethereum pays more real world US dollars for security than Solana does, even though Solana's inflation rate is higher simply because Ethereum market cap is so high. People don't think about it this way, but like I would argue 90% of Ethereum security comes from code diversity and multiple independent clients and audits and being battle tested. It's not that Ethereum's worth $400 billion and there's, X percent of it staked. The economic security arguments are very much a meme at this point. And the way we know this is L2s have no economic security and everyone trusts them just fine. For better or for worse. So when we set out to design proof of utility, the way this works is quite different. So we assign something called Shapley values to each provider and each link in the network. And Shapley values are an economic formula that basically says, how much worse would this system be if I took this component out of it? And so it's a way of assessing the value of something, looking at the counterfactual. And it's a really fascinating model. It was a Nobel Prize winning idea. And so we've applied it here to blockchain. And so if you are a provider that comes in and you provide connectivity that beats the public internet and that connectivity is useful to the users of the network, you will get rewarded. Now, this means sometimes you get very strange reward patterns. Like you can find a fairly short link that's connecting two networks, like the Galaxy network and the Jump network or something like that. That peering point can actually be valued quite highly by the network because it is effectively that one choke point that exists. And so what happens then? Well, everyone who's earning tokens on the network says, this link is earning a lot of money. How do I steal those rewards? Well, I can go build resilient, redundant connectivity and connect in at a different point. Or, there's a ton of validators suddenly operating in South Africa. How do I serve them and earn more tokens and rewards because of that? Well, now you're incentivized to put in a fiber network. The problem with most DePIN protocols, and I say this as like a big fan of Helium. I've been in the Helium community since 2019. Rewarding the concept of coverage it creates a lot of problems of gamification. It creates a lot of cheating, and the network isn't actually valuable if it's not being used. Now, you can make some arguments about how if you're going to sell excess capacity to Verizon and AT&T and T-Mobile, you need to prove it's there. Sure, there might be other reasons for it, but those are business reasons. They're not economic or system design reasons. And so we sort of started from first principles and said, if we can avoid this sort of idea of passive issuance, just thank you for existing, here's some tokens, that would set the network up much stronger for long-term competitiveness. And you sort of think about this as like the t-shirt factory problem, which is like, if there's 4 factories in the same city producing effectively the same t-shirts, the one that is a tenth of a cent cheaper than the other ones is going to get all the business. And so we wanted, and the incentive there is, okay, let's weaponize greed and capitalism, because now the next factory worker says, how can I cut 2 cents off my cost per t-shirt so I can undercut my competitor? And that was the model structure we wanted to design. And we've done a pretty good job of that. We have competitors, we have network contributors that work together in a lot of areas, but then also are directly competing with each other to get fiber lines that are going to be slightly faster than their competitor, which is just a win-win for every user of the DoubleZero network.
Yeah, I think that's a great outcome. It's something that I think we've actually not seen for the consumer, the traditional consumer, when it comes to fiber, due to the way that a lot of these businesses have arrangements and agreed upon things with local governments and states, et cetera. It hasn't really worked out in quite so market
Yeah.
market
I,
friendly of a way.
I will also say that the retail business is there's almost no relationship between the long haul business and the short haul business for retail versus like this other type of stuff. Retail's hard. Like I don't think DoubleZero will ever offer home internet connections or something like that because it's a very expensive, very difficult business that's again in a highly regulated environment. We operate under an information service provider, which is similar to what like Cloudflare or something like that operates under, which is this really nice framework that allows us a lot more flexibility than if we were, regulated residential ISP or something like that.
Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The number one distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. I guess, can you talk about the value flow then, just sort of to fully kind of tie the knot there between, you have validators and then actual contributors, and then there's some burns.
There is. So let me, I'll walk you through it from just the validator flow first, because the RPC flow is a little different. But a validator operating on DoubleZero, they pay 5% of block rewards per epoch as their sort of seat fee on the network, for lack of a better term. And so that can be paid in Sol tokens, or that can be paid in 2Z, the DoubleZero native currency. If it's paid in Sol, it basically goes into a system that gets swapped for the 2Z token. That's an open permissionless system that anyone can put in bids and asks to, and it basically clears there. And then those tokens, the 2Z that comes out of it today, 90% of them go to the contributors and are distributed according to the Shapley formula as a proof of utility, and 10% of them are burned for Sybil resistance. We over time we expect that burn to increase towards somewhere around 50%. For the start of the network, we just didn't have any idea what the economics were going to be, so started it off with just a low light Sybil resistance for burn. And then pretty much any new source of revenue that comes into the network will follow that same model. So, Shelby, for example, is this Aptos storage network. They have said that they're going to be building the whole thing on DoubleZero. And so the Aptos validator, sorry, not the Aptos, the Shelby validators there will basically be paying a fee to be located on the DoubleZero network. And then that will be paid in the native Shelby token, and then that will be swapped to the DoubleZero native currency. Now, there's actually a very cool thing with Near, that Near has built a very awesome cross-chain intense protocol. This is how people are like buying Zcash on Solana and all these sorts of things, even though there's no like real Zcash Solana bridge, and there's basically no VM on Zcash, is my understanding, so you couldn't really run a bridge well anyway. But Near is this really awesome multi-party compute wallet custody system, as well as an intense order router. And so it's very likely we'll use that or something along those lines to facilitate the ability for people to pay in pretty much any native token currency, and it all to flow through the DoubleZero token as that fundamental unit of accounting for the network.
I think that makes sense. So I guess just to level set on it, there's no minting of tokens in this scenario. It's someone kind of opts in to participate here, whatever fee they're paying, whether that's already in 2Z, or if it's Solana, or if it's Zcash, if it's Near or something else, gets converted over, and then some portion of that is paid and some portion of that gets burned, kind of in the current model. So
Yeah,
I guess
exactly.
as revenue scales, you just really, the model here is that those burns could potentially scale, and the token itself is driven on that.
Potentially, yeah. I mean, and I only say potentially because it's very hard to predict future demand for anything. But this is the model that B&B has been running on for years. This is the model that's worked pretty well over there. The major economic decisions would go through a governance, proposal and system. We have said that there's a chance that there may be inflation introduced at some point in the future. But that would really only be if it's necessary. I think so. So one of the original ideas, you can find this kind of in the white paper, is sort of a low, like 1%, 2% inflation per year to kind of cover a bunch of the costs of, like, DoubleZero has its own blockchain ledger, and that needs to be run and supported by many, entities for the integrity of stuff like the rewards calculations and these sorts of things. And so there is a little bit of fees that have to go to cover those costs. But that also could just be a diversion. So maybe instead of 50% of tokens being burned, it's 45% of tokens being burned, and so there's a little bit of revenue there that goes to the validators and the stakers and that sort of thing. There's a lot of different proposals of how that could get accomplished, but I think in general, if you can avoid creating issuance or inflation in a protocol, and you can make the economics work without it, that's a pretty good effect. Or you have just a very low amount of inflation, again, like 1-2%, something along those lines.
So I guess to that point, I mean, I think I wanted to get your thoughts here. Buybacks have become a big conversation again. I guess in this scenario, the buybacks are you kind of have buybacks baked in the sense that people are they're converting, the fee payment to the network gets converted into the token in some portion that is burned, but there's not like a separate revenue stream that's then being turned into the token.
Right. So I would not call that a buyback.
Right. Yeah.
Yeah.
I guess just making the point that there's already
Yep.
there's a burn mechanism within the protocol, and the fees
Yes.
flow through the token, right? I guess
Yeah. People have kind of most people don't know what they're talking about when they talk about buybacks. Not even from a perspective of is it a good idea or a bad idea, but definitionally, like, people mix this up all the time. Like, having a burn that's protocolized and based on usage fees paid into the protocol is very different than having a buyback. So, great example of this: Solana, 50% of base fees are burned. That's not a buyback. That is a usage-based burn. B&B, right? For a very long time, it was just usage-based burn. Now there's some other component of it that goes into that from other exchange profits and stuff. But if what you're doing is you're saying a percentage of fees paid into the network are programmatically and automatically burned with no discretion as to when it occurs, it's not collected in a DAO somewhere for people to, siphon money off quietly and then maybe eventually burn some of the tokens. It is like hardcore coded into the protocol. That is very different than a token buyback. A buyback is a capricious discretionary action taken by a DAO or a Labsco or something like that to say we are going to discretionarily burn a bunch of tokens that either we hold in the treasury currently, or we're going to take a bunch of USD profits and go buy the token or something like that. That's much more akin to like stock buybacks and QE and a bunch of that stuff, which I think has a purpose and function. But if you notice, like, all of the companies that do stock buybacks, they're very cash rich, and they're doing it instead of paying a dividend out. That's the trade you get, right? You buy your own stock as opposed to paying a dividend out because it effectively removes it from circulation. And it has this other effect of if the company ever has to raise money in the future, they don't have to necessarily issue new shares for that buyback to occur, which is different. Crypto companies don't have that problem, right? If you buy back and don't burn a bunch of, tokens, you're not actually doing anything. All you're doing, because you'll have to sell those tokens at some point in the future to, cover your operating cost and these sorts of things. So I think just as a front, people they're not being consistent about what they're talking about when they talk about burn versus buybacks versus anything else like this. But yeah, I would generally say I'm not a fan of buybacks as a accrual method.
I want to maybe just hammer down one point that I think you were getting at with the way that you sort of design the protocol. In that, today the fees sort of they get flown through the token, and then there's a burn associated. And I guess any future revenues, is the intent here really just to have that baked in or centered within the protocol, sort of how it operates itself. So if there's a new sort of revenue stream, it flows through the token, and then maybe there's a burn associated with it or something along those lines,
Yeah, and
versus accruing it elsewhere and then doing something with it.
so what I can say is it would be protocolized, right? And so what I mean by that is, for example, priority fees on Solana are not burned. But there's a SIMD that governs exactly what happens with priority fees. It's not like, oh, priority fees accrue to the Solana DAO and they can vote to burn them. It's just passed on to the validators, and the validators can then distribute it to stakers or take it as profit, do whatever they want to do with it. And so from our perspective, as new revenue streams come online, especially new L1s and L2s, the assumption is that would follow a very similar model to what currently exists. But for example, we'll be adding priority fees for basically, like, if I'm an arbitrage trader and I want to go over the fastest fiber connection possible and guarantee that my data will move over that connection, I may be willing to pay a premium to do so. It may not be that 10% of those fees are burned. It may be that 50% of those fees are burned, or it could be 5%. That is a question that's up to sort of more of the economic governance side of things. But what would not happen is it would not go into a DAO somewhere and then someone could arbitrarily decide in the future what they're going to do with it. It's the type of, like, I think you should just, like, protocol should be honest about what they're doing here. It should be passed on to effectively the validators. In our case, that's the network contributors, as just additional payout for them to do whatever they would like to do with it. Or it should have strict protocol rules about how those flow of funds are handled. For example, our current flow of funds model is 90% to network contributors, 10% gets burned. And you could imagine that ratio changing for a priority fee. You could imagine it potentially changing if there's some other types of revenue generating services built on the DoubleZero network. But, that's kind of just the way that works. For example, one of the things we can do is custom multicast groups. And so we were talking about multicast before as a technology, but what if you are like, it's a nice neutral thing to use here. What if you are creating a new block building system and you want some way for those nodes to communicate data to each other quite fast, and you want that to be not public for anyone can listen in on? Well, DoubleZero can facilitate a custom multicast group where you could see a world where it's like you need a certain number of tokens staked to be able to receive. Like, there's a whole bunch of backroom deals around shred distributions at this point where, folks like, that they basically charge for like faster distribution of shreds. Currently, those are all like dumb contracts. They're all paper deals between, like, I'm a trader, you have shreds, here's some money every month, give me your shreds. You could protocolize that on DoubleZero, and you could say, I'm going to be providing a distribution via multicast feed, and people are going to pay into it. Obviously, the protocol is going to have some type of take rate for that, and that revenue then would go into a similar type of system where portions of that are burned and portions of that are distributed out in different ways.
Gotcha. Great answer. Just wanted to
Totally
hone in on your thinking there. So I think that was
there's
great.
a lot of like
There's a lot of discussion around this topic. So
there's a lot of like labs tomfoolery that goes around in crypto,
exactly.
of like, oh, we built the bridge and the bridge has a 50 bip fee, and that just goes to the lab company, and then suddenly, like, there's a lot of yacht parties, right? Like, we're not doing anything like that.
Gotcha. Great. We can jump to the next thing. I guess I wanted to ask one more thing, and something that's been surprising and interesting to me actually is that I was chatting with Carlos last week on our roundup, and an interesting takeaway is that DoubleZero Sol, your LST via Sanctum, is actually nearly the largest LST on the network now from looking at the data. I was surprised to see that LSTs had been shaken up so significantly over the past 6 to 12 months, let's call it. I guess I want to understand, like, this, how meaningful and effective is this product offering from like Sanctum, and just like sort of letting you have this white labeled LST for DoubleZero?
Yeah, so I should clarify, we're actually using the vanilla Solana stake pool contract, the one that Solana Labs built and is sort of audited and supported by the core team. But Sanctum is like an incredibly important part of that flow because it allows instant liquidity and instant unstake for anyone using an LST on Solana. They've built I know FP Lee is awesome. They've built a really incredible product over there that just allows anyone to seamlessly swap from one type of LST to another. Love that team. Can't sing their praises highly enough. You'll see though that the APY on the DZ Soul is not the highest on the market. And that's because the function of DoubleZero Soul is not to maximize returns. It's to support the adoption and advancement of DoubleZero in service of making Solana faster and faster. And so the profits from that, right? Like there's some commission on that that goes into like new fiber lines and expanding connectivity to underserved geographic markets. And actually that's kind of where that line into Sao Paulo and Brazil, and one extending out to Argentina, those are paid for off of the LST fees. And so it really is something where, if you're looking to maximize your theoretical maximum return on an LST, like this is not the LST for you. If you're long-term captured by the DoubleZero vision and you think this is going to be good for Solana and the crypto ecosystem overall, it helps us support that expansion.
Gotcha. And maybe one more question there is, I know that DoubleZero is offering a lot of stake incentives to validators. So I guess, is a big portion of that LST sort of coming out of that pool, or is this largely from, individuals and other contributors who are wanting to gain access to DZ Soul?
Yeah, it's a mix. As much as I wish I had whatever it is, $1.2 billion of Sol to contribute to the pool myself, it is not our Sol. So it's a mix of investors and supporters, which ranges from some large institutions down to individuals that are just like quite taken with the vision for DoubleZero.
Okay, great. I think that makes sense. I wouldn't, if you had that much money, I think you could be doing much more grand, continuing this vision even more strongly maybe than you already are today. The incentives might be even more massive, right?
Yeah, exactly.
Yeah, I guess I want to expand the conversation here as we get to the end a little bit around maybe the interplay that, we talked a bit about performance improvements and kind of like the scale of networks as they continue to grow. And I think there's probably some interesting things coming to Solana. I think, Alpenglow is an interesting one in terms of finality. There's lots of talk around multiple concurrent proposers. I guess from your POV, like where do you see like really strong interplay between what DoubleZero offers on the latency side to the kind of scaling improvements that we're seeing to the Solana network over this coming year, 2 years?
Yeah, so Roger, who is one of the main ETHZOG researchers, who is behind Alpenglow and sort of the actualization of the long-term vision, which has been MCP for a while, was originally a bit of a skeptic of DoubleZero, but is now completely embraced the protocol, thinks it solves a lot of their problems around shred distribution as well as vote distribution. You couldn't have asked for a better consensus design to make use of multicast. Signature aggregation. So I don't know like how deep you want to go here, but signature aggregation is like super cool. So what happens normally is, votes are all sent around and you have to just assemble enough votes. And once you've seen enough votes, you can basically say, okay, we've passed the 2/3 majority threshold. This block is good. Signature aggregation is a similar concept, but you basically need to collect all the signatures, which is different than collecting all the votes. And so what's cool about that is you can multicast all of the signatures around. And so as soon as someone assembles enough signatures, they can just keep going. And this is why the Alpenglow consensus is both a variable time amount. It depends on where in the cluster you are and where the signatures are coming from. But it's a really, really cool way of basically speeding up this with multicast, because now instead of sending a vote out to like 1,000 different participants in the network, you can send the vote out twice, and just when everyone's observed it, you can see it. One thing about multicast that like sometimes people forget is it's concurrent and bidirectional. So like you can have 1,000 transmitters transmitting at the same time, and all that data will just magically get to the place it needs to get to, assuming you have enough bandwidth to carry it. So we're very excited about Alpenglow and Voter and Rotor, which are two of the main components that go into that. Rotor is the new turbine replacement, and Voter is sort of the vote pipeline replacement with signature aggregation. So very exciting from our perspective.
Very cool. And then maybe just to follow up on that, I guess what I'd love to hear from you is like if you looked out maybe 5 years. I don't know what the right time frame is here, but maybe it's 5 or 10 years or something along those lines. Like, where do you see? I think Tolly and plenty of other folks within the community talk about kind of their longer term visions for what sort of like the super healthy on chain Nasdaq network looks like. But I guess from your POV, what does that look like? You've got you know multiple concurrent leaders all over the world, and they're all on private
Yeah, I
fiber
mean,
lines, and blocks are massive.
I have gotten into some light trouble for saying this before, but we'll go again. Um, the roll-up centric roadmap, true vision expression, really is multiple concurrent producers. Um, and the reason I say that is if you think about the original promise of L2s, it was that, well, let's go back to talk about market structures. So if you think about like the New York Stock Exchange or the CME or Binance or Coinbase, these are point source, highly centralized markets. And they're, if you think about it, like the New York Stock Exchange is centralized down into one data center in New Jersey. And so where the stock market happens is actually like, a 1 mile by 1 mile square area. If you think about like where does base happen? Base happens in probably like 12 inches by 12 inches. It happens like in one rack, in one server, in one data center somewhere. And that is like the base sequencer. Binance order book, matching engine, same type of thing. These are very small markets. Now, what you get on, and small not in like a volume size, but like the physical footprint of the market is small. And so what it means is you're always racing to that footprint. And so we've gotten to the point where like in the New York Stock Exchange and NASDAQ, they actually measure out all the cables to be the same length. So even if your server is next door to the matching engine or, a mile away, there's 2 miles of fiber cable spooled at every single computer just to make sure the distances are all equalized. So when you think about a blockchain today, Solana is still a hyperlocal point source market, except that point source market moves every 1.6 seconds to somewhere else in the world. So the beauty of a multiple concurrent leaders architecture is suddenly you have 2 point source markets at the same time. And so what is the mathematical utility of 2 point source markets? Well, suddenly your market size is now the average distance between those two. And so it expands the geographic footprint of where competition can effectively occur by orders and orders of magnitude. And so if you have one multiple concurrent producer in Singapore and one in New York, and a giant fire takes place, or a giant explosion in the Foxconn factory in China, that news information will get to the block builder in Singapore before it gets to the public stock market in New York. And so if you have a world where equities are on chain and futures and options are sort of well built out, you could short Apple or short TSMC or a short Foxconn or long TSMC and ASML, whatever you might want to do based on that market information. And you can actually get it recorded into a ledger faster than you could get it to the New York Stock Exchange or the futures exchange on the CME to trade. That's really cool. And so for the first time, decentralization is going to become an advantage in terms of execution and performance, not just in terms of security and reliability and all of crypto except stablecoins is a trade-off where you get more certainty, more security, and you have, self-sovereignty, but you give up money and you give up execution time. Stablecoins are the only product where you actually get faster transfers, and it's very cool. But decentralization will become a like a market advancing function, not one that holds markets back when you actually get multiple concurrent leaders and you get this running on DoubleZero with fast multicast and all this type of thing. And so I think that is like the truest expression of how DeFi can not compete with TradFi, but truly run laps around TradFi, is when decentralization goes from something that's like we're glad it exists for the black swan moments to it provides truly meaningful improvement on a day-to-day moment by moment experience.
Love that. And I think maybe just to elucidate it a little bit more, like it does seem to me that there's a very clear positive connection between like an MCP world and what DoubleZero is building out, because you go from, today, if it's a base or if it's Solana and that key leader is moving all over the world, there's not quite a distinct, let's build a bunch of fiber lines to this location because that makes a ton of sense. But
Yep.
in this scenario where maybe there's always somebody in this NYC region and there's always somebody in this Amsterdam region and always someone in, Japan, then it's like, okay, we should be building out fiber here and there and there, and there should be all these connections to all these like sort of key places to the network. And I see that kind of really scaling with what DoubleZero is focused on. So to me, that it seems like that makes a ton of sense.
Glad to hear it.
Okay, awesome. I did some explaining for you there.
Yeah, no, but no, it really is exactly what you're talking about. Is uh, what we see today is there's a lot of very smart people putting very smart band-aids on the fact that the internet's not fast enough for what we want blockchain to do. Putting all your nodes in one region in Asia to build a futures market and options trading platform that can rival Binance is super cool. It's way cooler if you're actually able to run it 10 times faster because it's on dedicated fiber with multicast. And so, you see this on the L2s all the time about like there's no, apart from Starkware, there's like no decentralized sequencers or even multiple sequencers running because it's hard and the public internet makes this stuff really hard. And so, I learned this one from Toldy, which is if you've got a hard thing to do it first because everything else is easier. So we started with the hard thing, which was building a new internet.
Cool. I love that. And then maybe one last question for you, just generally. I know you're not at Solana anymore. Now running and operating for DoubleZero. But I guess I'd love to just get your broad thoughts on sort of where you see success coming here in 2026. Like if it's Solana DeFi or maybe just crypto DeFi, kind of more broadly. Like what's exciting on chain in the new year?
I think the mood across pretty much every network was like quite bearish in Q4, which is actually the time I get most bullish. Because this industry has a habit of running over its narratives. Like, if you ever, I don't know if you sail or if you've been on boats, but you can run over your own wake, right? You start off going slow, you go faster, you run into your own wake. It's like not a pleasant experience. Crypto does this every 9 months or a few years. And one of the main problems that you run into here is exactly this dynamic is like, oh, what are we doing? Maybe it's all just degenerate gambling and nothing really matters. It's like that's when that's the moment when the real products actually get built. And so I think what we've seen is like TradFi really embraced crypto in a way we weren't expecting, but they didn't embrace it on the execution layer. They embraced it as a new asset class to like get involved in. And that's step one. And step two is when the actual execution starts to come. So I think we're moving in the right direction for that. I think, token buybacks were probably a tragic mistake of too much money, but then so was WeWork. And we recover and move on, and things are going to go just fine. I think, honestly, I'm very excited for this year. I am also excited to get a lot more high quality engineers in crypto. I think in general, the average crypto dev is worse than the average TradFi dev, especially in an HFT firm, and is probably worse than the average senior dev at like it's not Fang anymore. I don't know what Netflix was ever doing in there, but the average replace the G with an O for OpenAI, or whatever. Like the top tier, the tier one of like Web 2 companies and AI companies, the average engineer is probably a higher quality. And so I think as crypto becomes a safer place to work, both legally and economically, that will attract much more talent into the space. And I think it's going to be pretty awesome to see.
Awesome. Love to hear optimism. I think you're definitely right that I think Q4 there was a lot more pessimism than there's been in the recent few years. So glad to hear some optimism. Maybe that's part of the new year. Maybe that's just Austin is an eternal optimist. Either one is probably good for us. Glad to have you on, and appreciate hearing from you about all things DoubleZero.
Yeah, appreciate it. Thanks for having me.
And I guess we'll have to catch up again sometime, maybe a few months down the road or next year, and just kind of see how things are going and how that adoption curve has been looking.
Definitely.
So, awesome. Thank you for coming on, and thanks to all the listeners out there. We will catch you next time.